Welcome back to GoldSeek TV. I'm Vanessa Collette, and I'm thrilled to be joined by Adrian Day, the president of Adrian Day Asset Management. It's great to see you, Adrian.
Well, and you, Vanessa. Thank you.
Now, Adrian, what are you excited about right now in the resource sector?
You know, for anyone who's been in the resource sector for the last several years, of course, it's very depressing. But I think one has to realize that, you make money by buying things when they're low and by selling when they're high. And I, along with a lot of other people, we bought too soon. But, I can't tell you how excited I am about the values that are out there now, both in the senior companies and in the mid-tier companies, as well as the exploration companies. There are some great companies that are just on sale, basically.
So what are you doing with your fund right now? Are you just holding cash, or are you going out there and buying selectively?
Yeah. Well, a disclosure, I can't talk about what we're doing in the fund. It's not allowed. So I'll talk about what we're doing with clients, which I can talk about.
Okay.
No, we're buying. We're topping up as much as we can. Anyone who is underinvested or has money, we are topping up, number one. Number two, we're readjusting the portfolio because we don't have a lot of money because we spent it all in the last couple of months. We are selling our less favored and upgrading the portfolio into our favorite stocks. So one can always do that. You get a tax loss and you upgrade the portfolio. But we're buying seniors. We're buying the royalty companies like Franco and Royal Gold. We're buying the seniors like Goldcorp and Agnico, which are both great companies.
Do you still like Silver Wheaton?
I like Silver Wheaton a lot at 12 whatever US. I don't know what it is in Canada, but in US, 12.20 or something. That's just a great buy. And I think that price fully discounts them losing on the tax issue.
Right. Now, what's your outlook on precious metals? Do you see anything imminent?
I'm not sure that anything's imminent. But one thing I would say, bear markets or corrections, deep corrections, as well as bull markets, they can end in one of two ways. They either end when there is some trigger, some event. People say, well, what's the trigger with gold? But the other way they can end is just from exhaustion. A bear market ends when it's just got low enough that there's no one left who wants to sell. I can name stocks that I'm not selling, some people are. But if they're 50% less, I can tell you no one's selling. They're in hands of people who want to own them. And you just run out of sellers, and that's when the markets turn. And I think we're getting close to that in gold, I really do. The fundamentals are still strong for gold.
What's your outlook on the global economy?
Oh boy. I'm cautious, but I'm not expecting a collapse anytime soon. The Federal Reserve and other central banks are just pumping money in like crazy. Interest rates are ultra low. Now that distorts the economy. It's a scary time because things aren't real. Stock prices aren't real anymore. But so long as they continue like that, that'll continue or could continue for quite a while. And I'm quite sanguine on China. China, of course, has been a driver of growth since 2008, since the credit crisis. China has been responsible for more than 50% of the world's growth since then. And I'm quite sanguine on it. If China grows to 5 or 6%, that's less than currently. That's still very, very healthy growth, especially for a country that's as large as China. So no, I'm on the global economy, I'm reasonably optimistic for the short term.
And that growth that you see coming, in China, do you also see it in other areas at all? India, perhaps, or?
Less so on India. Certainly, some of the other Asian countries are quite strong right now. I don't like Japan right now from the economic point of view. Latin America is definitely very mixed. Brazil is having problems right now, and both political and economic. Interest rates are actually going up in Brazil. Inflation's rising, growth is slowing, the currency is falling. So I'm less optimistic on some other areas, but Britain is doing well. Germany's doing reasonably well. So it's really quite selected at the moment.
What are your thoughts on the whole Greek crisis, and what do you see happening in the euro?
Greece should never have entered the euro. It should never have entered, and B, it should never have been allowed to enter. Especially since the figures that the budget figures were fudged to allow them to enter in the first place. as we know, Greece has been a habitual devaluer of its currency and a habitual defaulter on its debt over the last couple of centuries.
But aren't they just doing what everyone else is doing and devaluing currencies?
Now they are, yeah. But here's the point. If Greece was independent, they have flexibility. In the current situation, the flexibility is to devalue the drachma so that they lower their costs. In the euro, they can't do that. In the euro, they're fixed. And to me, it's just, I mean, I'm very negative on the euro. I think the whole framework is just faulty. It's a faulty framework to begin with. And Milton Friedman was the person many years ago who said that the euro will last until they have a real crisis. Because they can't, with a fixed currency, you can't deal with a crisis. Now, it's idiotic that a country like Germany has the same currency at the same exchange rate and the same monetary policy as a country like Greece. That's idiotic, and it's idiotic on the face of it. So at some point, Greece has to leave. Greece cannot pay its debts, not under the current system, not, oh, it's going to be tough. It's mathematically impossible for Greece to pay its debt.
And the European Union, you see it continuing just without Greece?
Well, there's two different things, of course. The European Union and then the Eurozone.
Right.
The Eurozone, I think, is going to break up fairly soon. The European Union, I would like to see much looser. I mean, go back to what it was in the first place, an economic union of free trade. That makes sense. So you get countries like Britain, Sweden, Denmark, Finland, they're in the European Union, but they're outside the Eurozone, and they're doing a lot better. All of them, they're doing a lot better than the countries in the Eurozone.
Right.
So it's the euro that's the big problem.
Now, do you see, in the U.S., do you see the Fed raising rates in September?
I don't know if it'll be September. My own feeling, I mean, I've said for many years, or for some time now, that I think the Fed is going to be very, very reluctant to raise rates. I think they have boxed themselves into a corner now by almost promising to raise rates. And I think for the sake of whatever credibility they have left, which with some of us is very, very little indeed, but for the sake of whatever credibility they have left, I think they have to raise rates this year. It may not come to December. So let's remember, next year's an election year. And typically the Federal Reserve does not raise interest rates during an election year in the United States because that's seen as political interference, you know? And so if they don't raise them by December, they probably won't raise them next year at all. So I think we're going to see one rate hike this year. But you know what? Unlike normally when the Fed changes, either the first rate cut or the first rate hike, it's the first in a whole series. This is not going to be the first in a whole series, and in fact, Janet Yellen herself has emphasized that it's going to be a gradual increase in rates. So I think it's going to be very, very slow indeed. But plain fact is that the Fed cannot raise rates, not only because the economy is not really strong enough for higher rates, but because of the federal debt. You know, that if they raise rates, that just increases the servicing of the debt.
So you don't see it happening?
I think we might get one rate hike this year, just to
Something
preserve
symbolic.
credibility, to say we did it. But I don't see a rapid series of interest rate hikes.
Well, Adrian, thank you so much for joining us today. It was a pleasure having you.
Well, thank you very much.